Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 5th, 2025, and we're diving into the latest earnings report from The Children's Place, the largest pure-play children's specialty retailer in North America. Joining us is John, our senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. The Children's Place has just released their second quarter 2025 results, and there's a lot to unpack, from their financial performance to strategic initiatives.
Revenue and profitability overview. Let's start with the top line. The Children's Place reported net sales of $298 million for the second quarter of 2025, a 6.8% decrease compared to last year. John, what are the key factors behind this decline?
The decrease in net sales was primarily driven by lower brick-and-mortar revenue due to a reduced store count and decreased sales volume. Additionally, e-commerce sales also saw a decline due to lower traffic and conversion rates. However, it's worth noting that these trends have improved since the first quarter, thanks to shifts in marketing strategies and new product initiatives.
Despite the sales decline, the company reported a net loss of $5.4 million, or 2 cents per diluted share. How does this compare to their adjusted earnings?
On an adjusted basis, the net loss was $3.4 million, or 0 per diluted share. This is a significant improvement from the previous year's adjusted net income of $3.9 million, or 3 per share. The adjusted figures exclude certain non-recurring costs, providing a clearer picture of the company's core performance.
Operational efficiencies and future outlook. Moving on to operational efficiencies, the Children's Place reported an operating income of $4.1 million, a turnaround from last year's operating loss. What contributed to this improvement?
The improvement in operating income is largely due to better inventory management, which resulted in a $78 million reduction from the prior year. The company is also implementing a transformation initiative aimed at streamlining operations, expected to yield over $40 million in gross benefits over the next 3 years.
How is the company addressing the challenges posed by tariffs?
The tariff environment remains unpredictable, with projected additional expenses of $20 to $25 million for fiscal year 2025. However, the Children's Place is well positioned to manage these impacts through strategic initiatives, including a diversified sourcing strategy and strong vendor partnerships, which are expected to mitigate approximately 80% of the tariff effects.
Strategic initiatives and market positioning. John, let's talk about the Children's Place's strategic initiatives. How is the company positioning itself in the market?
The company is focusing on expanding its licensing and emphasizing fashion-forward assortments, which have resonated well with their core customers. They ended the quarter with strong momentum for the back-to-school season, marking the first month in 18 months with positive comparative sales growth in their direct-to-consumer business.
What can we expect from their upcoming initiatives?
Looking ahead, the Children's Place plans to launch a new loyalty program in the third quarter to drive customer retention and enhance lifetime value. Additionally, they are shifting their strategy from closing stores to opening new ones, aiming to revitalize the customer experience both in-store and online.
Key takeaways. In summary, the Children's Place is navigating a challenging macroeconomic environment with strategic initiatives aimed at driving long-term profitability. Despite a decline in net sales, the company has shown resilience with improved operating income and a focus on operational efficiencies.
Absolutely. The transformation initiative and strategic partnerships are key to their future growth. While challenges remain, particularly with tariffs, the Children's Place is taking proactive steps to mitigate these impacts and strengthen their market position.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on the Children's Place's performance in the comments below.